Welcome back, dear students. Today, let us see the difference between direct tax and indirect tax. Okay, first let us see what is direct tax. Direct taxes are those taxes which are taxed directly on an individual, either on their income or on their wealth. Okay, so the income that they generate, and if it is getting taxed, then that would be called as direct tax. Indirect tax is where the consumer would be paying tax on the purchases that they make. Yes, so that's the basic difference between direct tax and indirect tax. Next, let's move on to the other differences that we have between direct tax and indirect tax. So first difference that we're going to see is the difference in meaning. So what is the meaning of direct tax and the meaning of indirect tax? So when we look at the meaning of direct tax, the direct tax is charged on the income or wealth of an individual. So I work as an employee and I generate income. And if my income is chargeable under tax, then that tax is called as income tax, which is direct tax. Yes. Now let us see what is indirect tax. So indirect tax is charged on the consumer when he is consuming goods or services. So when a consumer consumes goods or services, at that point of moment, if he is taxed and if he is paying tax on his consumption, then that is called as indirect tax. Hope you would have got clear picture of what direct taxes and what indirect taxes are. Next is, let's look into the nature of direct tax and indirect tax. So when we look at the nature of direct tax, it is progressive in nature. So first, let us see what progressive in nature mean. Progressive in nature is nothing but the tax would change with the level of income or with the increase in the wealth. So if a person is holding more wealth, then he would be taxed more, and if a person is having less wealth, he will be taxed less. In the same case with the income tax also, if you're generating only a very little amount of income, you'll be taxed less, and if you have a very big income, then you'll be paying much more tax. And if we look at the indirect taxes, it is regressive in nature. So regressive in nature, in simple words, you could understand that. So it doesn't differ with persons. It differs only when the quantity that you purchase or the value that you purchase. If it differs, that would differ. Otherwise, regressive in nature, it is same for the individual whosoever is purchasing that particular product. So let's take this example where you have two individual. So one person who's the wealthiest one and the other is very poorer one, and both of them get inside a particular shop where they look at a particular mobile phone, and both of them are getting those mobile phone. Like if it is same mobile phone, the wealthiest man is also getting that mobile phone and the poorer is also getting the same mobile phone. So the GST that would be payable on that mobile phone doesn't differ depending on the wealth of the individual. So they'll be looking at only the value of the supply and tax would be taxed. So it doesn't differ with the income that is generated or with the wealth of the individual. So this is called as regressive in nature. Next, let us move on to the tax incidence and impact. So tax incident is nothing but where the tax is charged, and the impact is who will be paying that tax. So here the incidence and the impact is on the same person. So if I'm an individual who's making income, and if I'm charged under direct tax, then I'm liable to pay the tax. So I'm the one who's generating income and I'm the one who's paying the income. But if we look at indirect tax, so what happens with indirect taxes? It is taxed on two different persons. So how does this work? So I'm a supplier and I would be collecting GST from the consumer. So what do I do with the taxes that is collected? I'll be paying that to the government authority. So this is how tax is being collected from other person and it is paid by the other person. So you have two different persons. Next, let us look at the case where we have the option of evading the tax. In case of direct tax, there are possibilities where individuals do evade taxes. Whereas if we look at indirect taxes, it is not that easy where an individual can evade taxes. Next, let us look at the effect of inflation. So in case of direct tax, it always aims at reducing the inflation in the economy. Yes, whereas if we look at indirect taxes, it always aims at increasing inflation in the economy so that the business could generate more revenue and more taxes can be collected. Next is imposition and collection. So tax, we have seen in direct tax, we have seen the example of income tax. So income tax, it is imposed and collected from the assessee. So we call that individual who is liable to pay tax as assessee. So any of the income that is earned by an assessee during the particular period, say relevant previous year, he is liable to pay taxes for those income. So it is imposed and collected from the assessee. Whereas indirect taxes, it is imposed and collected from the consumer and deposited by the assessor. So I'm a retailer who's registered under GST. So what I do is I'll be imposing the tax on the consumer and I'll be collecting the taxes and I'll be filing the returns and pay GST to the GST authority. Next, if we look at the possibility of transferring the burden, if I'm charged under income tax, I have no option of transferring my burden to other individual. Whereas if I look at the GST, this option, we have the option of shifting the burden to other individual. That is, the ultimate consumer would be paying GST. Next is event. So when do we pay direct tax? When we generate taxable income. Whereas indirect tax is charged at the point of supply, that is either purchase, sale or manufacture of goods and services. So income tax is charged on the base of income that is generated by the individual. Whereas direct tax is charged depending on the supply of goods or services. The rate of tax differ from person to person in direct tax, whereas in indirect tax it does not differ from person to person. And the assessment year, so in income tax we have this term called assessment year, where the income that is generated in the previous year would be taxed, whereas in indirect tax we do not have such option as previous year or assessment year. Thank you.